Good morning and welcome. I'm Artie Manfredi with the Homeward Group, and I'm joined here by John Kurtz with Premier Mortgage Group. John, thanks for coming out today.
Oh, thank you. It's great to be here.
Just a quick question. We're doing a mortgage update today, and just curious, everyone is talking about how low rates are. What does that actually mean?
Well, Artie, I think it has a couple of big impacts. The first impact is that I think this is just a huge opportunity for first-time home buyers, or really anybody that's considering buying a home. We haven't seen rates like this in our professional lifetimes, so that has a huge impact on payments, which is something I was looking back towards the first-time home buyer tax credit, which expired in late spring. Back then, interest rates...
Excuse me, that was $8,000, correct?
That was $8,000, and it expired, I believe, at the end of June. At that time, interest rates were about 0.75% higher than they are right now.
Okay.
So, for example, on a $150,000 loan, that would translate to about a little over $100 a month in savings for a buyer, and over 10 years, that would translate to over $12,000 in savings. So, at that point, you're already ahead of the tax credit.
Wow, and that was just 0.75%?
Correct.
Wow.
Yeah. So over the life of the loan, 30 years, that's over $36,000.
So in essence, you're actually saving more money now than you would have with the tax credit.
Correct. And put in a different way, let's say you have somebody who's making, say, $4,000 a month. That savings actually translates to them qualifying for more money, more house that they can buy. In that case, for a borrower making that kind of income, it translates to over about $20,000 additional purchasing power that they have.
Wow, so $4,000 a month with the current rates, $20,000 more house they can afford?
Correct.
Excellent.
So that totally changes what they would be able to go out and look at, perhaps qualify to buy.
Wow. Now talk about qualifying. There's a lot of talk in the national media right now about qualifying for loans, and that it's really hard. Is that in fact the case, or what are you seeing when qualifying?
Well, I am seeing that in the media. I think that's a little bit of a mistruth. People are able to qualify. We're qualifying plenty of people for loans. Is it harder? Yeah. We're asking for more documentation. Things are being scrutinized more heavily in underwriting. So, yes, we're going to put you through a little bit more, but there's definitely plenty of things that people can qualify for. I think it's worth talking to a professional that knows the guidelines and has been in the business for a while to see if you can qualify.
Okay, excellent. So bottom line is you still can get qualified. Just need to talk to somebody first, and they may require some extra documentation. Is that correct?
Absolutely.
Okay, excellent. Now on that, in helping people get qualified, are there any programs out there to help out, especially the first-time home buyers? They're usually the ones that I find seem to not think that they can be qualified because they've never owned a house before. Are there any programs to help them out?
Well, there's several first-time home buyer programs. I think probably the most common one that we use would be FHA. And then the nice thing with FHA is that they only require 3.5% down. In addition to that, they're more lenient on credit and other guidelines as far as job history. So FHA is a great program. The other thing that they also will allow you to do is your down payment can come entirely from a gift from a family member. So we also have a couple of down payment assistance programs available where somebody can qualify with as little as $1,000 down. So,
wow, excellent, excellent. Well, John, thank you so much for coming out today. Again, this is John Kurtz with Premier Mortgage Group, and I'm Artie Manfredi with Homeward Bound. And please give us a call if we can help you with any of your real estate needs, and we're happy to help.